Hello everyone, my name is Salim and welcome to the Markets Breakdown Analysis for Wednesday, the 25th of October 2023. We'll be breaking down chart and show the exact zones where price will close for potential buys or close below for potential sells as well. So looking at the daily candle for Tuesday, the daily has been bearish, breaking below the Monday daily low and now retracing and more likely will be closing weak bearish almost to where the daily candle have started. Now, obviously, the anticipation we've had, the anticipation to see a daily candle closing bearish, simply because we had a confirmation based on a daily candle on Friday closing with a rejection to the upside, and price failed to retest the 2000 level, which is a strong key level on high time frame. Also, we have to remember that the monthly candles coming to an end soon, so these kind of retracements based on the, let's say, on the high time frame, these are expected. So, the only thing I'd say is the reason why I don't like this retracement is because price is going back to a range on the follow time frame, and those kind of ranges, these are nasty ranges on the follow time frame. The kind of consolidation zones I prefer where price is ranging, let's say for 4 hour, let's say price range between 1970 to 1980, just a quick lesson here, and let's say this is going to be a range. Okay, so the hourly, the 30-minute time frame is just going to range within this level, yeah? And then once price break above this 4 hour resistance, now we have clean traffic on the left to retest this 4 hour resistance. Now the problem with this here is we have price making a low and then starting to consolidate, not with like a straight line. This is a downtrend, and when these kind of consolidation zones appear, it makes it difficult to have a small no trade zone because simply because of how price is forming within the, let's say, the hourly time frame, the 30-minute time frame. So eventually we will have to make these no trade zones really large. So now to break down the chart, and let's go back to the daily. So the daily will be closing weak bearish, forming weak daily resistance around 1973 800 to drop it down to the 4 hour time frame. And now to break down the chart, we have the most recent 4 hour support formed around 1963 700, and then we have the most recent 4 hour resistance formed around 1977. Drop it down to the hourly time frame. Now this is what I was trying to say. So instead of having, let's say, now the problem is, let's say, so this is an hourly support, this is a really messy range, and then you have this messy range. So eventually this is going to be a big no trade zone. Look at this, so 180 pip range. But obviously we're going to adjust these levels. So we have a same level of support and resistance. Drop it down to the 5-minute time frame. I would just what I'm gonna do here is I'm going to look for potential buys. So the first strong confirmation we'll have is the 4 hour resistance, and this is where price is ranging, the 4 hour time frame. So what we can see is we have this 4 hour resistance around 1979 800. Drop it down to the hourly, and then we have an hourly resistance around 1981 500. And pretty much that's the same thing on the 30-minute and the 50-minute time frame. So I would say potential buys could be above, let's say, 1981 500, above this hourly, which is also the 4 hour range. And potential sells, now this is the tricky bit, okay? So there is no way we can compromise on this side, because we can clearly see if we were looking for potential buys above this level, the next level is 16 pip range, and then 19 pip range, and then 20 pip range, and this is a really nasty range, and that's also a range on the 4 hour time frame. But the one thing we can do is on potential sells. Now what we could do here is, let's have a look on the 4 hour time frame. So the first thing we can see is we have this 4 hour low around 1968 900. Drop it down to the hourly time frame. This is an hourly low. Looking at the 30-minute and the 50-minute time frame, there's really nothing to identify here. But what we can do is look for potential sells below 1968 900, and the only way we could see this working is to wait for price to break and close out of this range during high volume time. So for example, we might see the Asian session dropping down, and then you'll think, okay, that's it, price is just going to keep dropping. But then you'll start to see price retracing, going back into this range to keep consolidating. Then potentially we'll have a nice move during the London session or the New York session. So obviously we need to wait for high volume time to break out this range. So say potential sells could be below 1968 900. And this is going to be the no trade zone. And now to look for potential buys, and probably buys are going to remain the same as the analysis posted yesterday. As we can see, this 4-hour range has been on a downtrend. So the first thing we did identify here is we had a 4-hour resistance around 1991,900. Drop it down to the hourly, clean traffic on the left. We identified something within this rejection wick. We're looking at a 5-minute time frame. We have identified, I think the 50-minute time frame, we had this 15-minute resistance around 1986,600. So the first target for buys could be 1986,600, targeting this 15-minute resistance. And the second target for buys could potentially be the 4-hour resistance formed around 1991,700. And now to look for potential sells. So on the daily time frame, obviously this is a rejection wick. So this is a huge retracement on the daily time frame. So when we measure this, this is roughly around 174 or 177 pip range. So dropping down to the 4-hour time frame and looking at the most recent price action, the first thing we can identify here is we have the 4-hour support around 1963,700. Drop it down to the hourly. This is an hourly support. But then we're looking on a 30-minute time frame. This is a decent, strong 30-minute support around 1963. I would have the first target for sells at 1963, targeting this strong 30-minute support. The second target for sells, now let's have a look again on the dailies. We're just going to put a line to where this daily candle has been formed, around 1959,600. Drop it down to the 4-hour time frame. Now this is a rejection. We have this previous 4-hour range. Looking at the hourly time frame. Now within the hourly time frame, we've got something new. So we have an hourly previous resistance around 1954. Actually, let's have a look on the 30-minute, 15-minute. Maybe what we could do is the anticipation to see price retesting this hourly resistance. I'd say the second target for sells could potentially be 1957,100, targeting the hourly resistance formed on the 18th of October 2023.
Dominion Markets, your trading sanctuary.